Hello there traders, let's continue our little videos here on selected topics. So rather than preparing a complete PowerPoint presentation with loads of slides, sometimes it's better to just pick certain topics and elaborate a bit on them respectively. So today I would like to talk a little bit about trading psychology and your mindset. So let's get started. The first thing I wrote is trade like a bot. What do I mean with that? Even if you're a manual trader and there is discretion involved in your activity, as I always say, you will learn a lot by working on automated strategies, because you will see how these operate, how they go about things, and you will realize how you yourself have to trade manually in order to be able to implement your strategy efficiently. So what do I mean with that? Well, first of all, control your emotions. Apart from all the complexity regarding the analysis and the predicting and forecasting of the markets, which was the focus always of this channel and my work here, make sure that you have all your human weaknesses under control. Unfortunately, the reality is that most people do not control their emotions enough. And that translates into the following situations. People start trading, they are getting kicked out on 3 trades. So what do? They want to make it all back in 1 or 2 trades. So they start not being diligent with regard to trade selection. They try to force things, and what happens as a result? It all gets worse, not better. You cannot afford to do revenge trading as a manual trader. You need to really be ice cold in that sense, okay? You need to really have a cool head. And I can tell you clearly, professional trading means that on some days you get kicked out, you lose, and you go home. And it doesn't feel great, but it's part of the game. The trick is that you do not lose your shirt. You do not blow up your account on those days. You just have a losing day. And every trader has losing days. Do not let anyone tell you otherwise, okay? So also do not do P&L chasing. I need one more trade, then I made a few thousand per day. Try to not lose your mental control just in order to achieve certain numbers on your account, on your P&L. Alright, you can't afford that. Professional traders, they do not do that. They really trade like a bot. They evaluate the setups they have on the day, they take the trades, and they try to really be emotionally disconnected from the outcome of those trades. And that's the thing which is easy to say and difficult to do, of course. Because we trade in order to make money overall, no question about it. We are in the business of collecting pips and increasing our accounts, not of losing. But here's the thing. Losing is part of trading. You need to be a good loser, but we'll come to that. You need to be diligent and disciplined with your trade selection. Okay, do not just randomly place trades. Wait for the very specific setups. Alright, and if the setup is not good enough, you skip it. If your entry would be too late and therefore your risk return is completely unbalanced, skip it. You need to have the discipline. The better you can select, the better will your overall results be. And again, it's not fun sometimes to say, you know what, that setup is not good enough, knowing that most likely it will go in your favor. But you need to have that mental strength to say, you know what, I'll wait for another setup. Be diligent and disciplined with your risk management. This is essential. You cannot lose it, alright? You need to follow your risk management plan. Whatever your risk management plan is, even if you're an aggressive trader, there are defined limits in your risk policy. You cannot break those limits, alright? Be professional. In many hedge funds, traders have very, very tight risk controls and they can't breach them. Sometimes they need to ask for um, higher risk parameters, etc., and it needs to get approved. But take this seriously, okay? It doesn't make sense to write a risk policy like a business plan and then to just disregard it anyways as soon as you are clicking on your mouse, okay? But many people do that. Take it seriously. Discipline is required. Be diligent and disciplined with the trade management. Sometimes you may protect the trade and it kicks you out at break even, and after it does a beautiful move. Again, it's part of this business. It may feel weird sometimes and you don't like it, but you need to be able to still do your thing according to plan, and you can't get provoked by the market. Alright? Manage the trade as it's supposed to be managed according to your respective style. Do not deviate from your particular approach and strategy, okay? And by the way, if you want to collect investors' capital in the future and also trade for others, understand that the return you're supposed to achieve comes at a certain risk policy. And this risk policy may be arbitrary, but that's the price the potential return comes at, okay? So, whether you trade for yourself or others, from the very start, take things seriously, be professional, and be very, very aware what your particular risk policy is, and make sure that you respect it and you just don't lose it and mess it all up. Okay, let's continue. Do not over leverage. This is essential. And the problem is, many of you traders, you sit at home, nobody watches your back, nobody enforces accountability, so you're there with yourself, and often that's where problems start. Do not over leverage, okay? There are enough trade opportunities every day, every week. It's not necessary to go crazy on certain trades. Yes, there are some periods where we have squeezes and very clear setups and you can go for it and be a bit aggressive, but that doesn't mean that you over leverage and you risk the house on just a few trades. Do not do that. You can mess up any strategy and any approach by not having discipline regarding that. Do not overtrade, okay? It's important and essential and necessary to differentiate, to be very, very selective. Even with the causality, we see a lot of movements every day in the market. We see even some little moves where, we can predict what will happen, but there's not a high degree of tradability. Do not be a Rambo, be a sniper. Wait for the particular setups and trade them in a very diligent manner, okay? Do not just try to shoot at, this looks like it's going to go up further. That's not how this works. It may work a few times, but then it doesn't. Have realistic expectations, yeah? The return comes from your ability to do what I just explained, to trade well, to look at things as objectively as you can, despite having a subjective perception. Yeah? The more you have things under control, the better things will work out for you. Yes, you may have losing days. You may have a losing week. You may do mistakes, but that's all fine. If you keep on working within certain limits, you will be okay. And since the most difficult part is already sorted out for you with the market causality, you do not need to waste all that time finding something which works overall, where you can have full confidence that even if you get kicked out or something, this works 80 out of 100 trades. This is a big issue, but this is sorted for you by being a causality trader. So you just need to focus on implementing well. Okay? Other traders, they do not see anything. They're blind. They try to interpret all kinds of things on naked price charts, and it's not consistent. You see the market structure in front of your face. You see where the positions are, the stops are, whether there's a squeeze, whether the market's ranging, whether there's going to be a 4-hour reversal, whether a moving average on the day chart will be cleared, etc. All this is worked out for you objectively. So now you can concentrate on just implementing well and taking calculated risks, not stupid risks. And we do not try to get rich overnight. We do not try to make exorbitant returns every month, because guess what? What we are going for is consistency. We want to do well overall. We want to make sure that we collect profits from very predictable scenarios. We do not gamble, we do not run behind trades, we do not run behind our P&L. And if you follow that mindset, you will do very well. But this is essential. We do not just pick a few trades and then risk a lot of capital on those. That never ends well. Patience is very important. No matter what anyone tells you, even the guy who does order book scalping, whatever, I can guarantee you waiting is part of any trading style. Read all the books. Even scalpers, they need to wait hours in between. And for me personally, at the very beginning, there was a very difficult hurdle because I wasn't very patient. I was like an entrepreneurial type. I always wanted to do things. That's why I needed to completely change my mindset and adjust it to the reality of the game. Patience is required. Sometimes you can't do much and it doesn't feel great because you don't feel productive. But in trading it's necessary, otherwise you will end up losing. We try to avoid big losses. We try to score when we know we can score. Again, differentiate. This is not a bakery where you make your 100 breads every day. It doesn't work like that. Some days are slow, some days are not. Some weeks are easy, some are more tricky. Give trade setups a respective value. Differentiate. Very important for causality trading. If you have a 4-hour reversal and you have a nice down money switch, but then the high hasn't been cleared yet, that's a minus point on your checklist. Yes, it may be tradable, but you need to decrease your risk per trade because there's still one minus point on the checklist, okay? Do not just say, whatever 4-hour reversal I trade, I give it the same percentage of risk per trade. That's not a great idea. You need to differentiate. And yes, it takes a bit of discretion, but it's no rocket science. Other things which are often true, let winners run. Often it makes sense to try to gain some upside by letting the thing run rather than taking a profit quickly. Fear of missing out, you can't have that. Sometimes you miss things, sometimes there are moves without you. It's part of the game. Do not get provoked emotionally by these things. Other topics, incorporate news. Yeah, sometimes the market waits for a certain news announcement and then there's a counter move before it and then some house splitting after that. Go with that rhythm. Do not try to trade for 3 hours even though you know that at 4 o'clock we're going to have big US news, because as we know, the smart money is just getting the ducks in a row. Just because you have time to trade and you want to play some trades doesn't mean you should. The market decides when there's a time for you to score, okay? And it's the same with rates. Sometimes we have the rate announcements in the week. These are important events in the week, okay? Respect them and be very conscious of what your risks are right before that. Let the thing pass, let the smart money algos clear the house and then wait for the next bias. That's most of the time the right choice. Be a good loser. Yeah, that's very difficult, but losing is part of the game. And no matter how great of a trader you are, you need to be a good loser. And you need to take it also with a grain of salt, because guess what? You have full confidence that overall you will be profitable. But there will be those days where you go home with a loss. Yes, there will be weeks where you lose. Because let's say there were only 6 MTS runs. You missed 2, you took 4, you got kicked out on 1, then you made another mistake, so you end up negative. Fine, okay, but you didn't lose your shirt, you didn't blow up. Come next week, be on point, alright? Be there when the action happens. Have your risk policy in place, have the patience to wait for the right setups. When they appear, pull the trigger, go for it. You will, do well, and then you get motivated when things are under control and they're going in the right direction. That gives you a lot of motivation. But also be a good winner. If you do well for a while, okay, do not lose it. Stay humble. You're not the master of the universe. The market will be more tricky again. You may have just caught an easy phase. And that's true for weeks, that's true for months, and even beyond that. That's a problem with all those naked price chart traders. They may have found a setup which works well for now. Well, guess what? It won't work well in the future. That's why they're going to lose. But I will talk about that in another video. But, okay, be like a bot. Trade like a bot. Whether you lost, that's not a problem, because you have a strategy that works and you see the market, so you'll come back. And if you really collected a lot of pips, stay humble. Do not calculate how rich you will be in a year and all that. Okay? Stay grounded. There are those people, when they have a few good weeks, they think they figured it all out, and you know, they want to be the next Ray Dalio or whatever. That's not how this game works. This game changes all the time. Look at, for example, how the smart money algos change the average range in pips. That's all they got to do. Sometimes they increase the range, sometimes they decrease the range. They just need to switch between squeeze moves, where the market stretch in one direction, like we saw recently, and those phases where there are 4-hour reversals one after another before, like raging markets. By switching between those two, by changing the pip amount for the ranges, they mess up all kinds of systems and setups and patterns and price action. Okay? Think in the long term. Alright? Do not think you figured something out because you had a good run. That's a big, big, big mistake. Okay? And then lastly, believe in yourself. That's actually important. And I'm not talking about being cocky in any way, but I'm talking about having full trust in your abilities and in what you're doing. You can have full trust in the market causality. No matter what market mode or phase we have, the causality unfolds in front of your eyes. Alright? There will always be the stop hunts, there will be the post-stop hunt moves, there will be the option strike target runs, there will be the short-term stop runs, there will be squeeze moves, there will be 4-hour reversals, there will be fake support, fake resistance, grail patterns. Okay, they will move against new dark money flow, there will be fueling PBs, they will clear the high, they will clear the lows, they will make a fake out, they will fill an order gap zone. Okay, all these things we know about will happen in different combinations. But this big issue has been sorted for you by the market causality. Can you imagine if you don't see any of that, you're completely blind, how difficult that is? I mean, how do you even want to establish any kind of consistency if you do not see the actual market in front of you like we do? There's no way. Okay? And people who try to convince you otherwise, they're lying. As simple as that. You need insights. And even then, it's still a demanding activity, yeah? Apart from the necessity to be on top of your abilities, you need to follow what I'm showing here, okay? Have that kind of mindset, alright? That should be your trading psychology. I come here to implement well. And then be happy when you have proven to yourself that you can consistently analyze and predict the markets, that you can place trades efficiently, that you can minimize mistakes, that you are able to have some balance and risk return, that you are really differentiating regarding the value of the trade. If everything aligns, you can risk more. If there are minus points on the checklist, you have to risk less, okay? That's the advantage you have as a human trader. That's something which is quite complex for a bot to figure out. Can you imagine how many factors would need to be programmed into it? But as a human trader, you see all these things, and with a bit of practice and tape reading, you know, okay, that's a minus, that's a minus, that's a plus, that's a plus. Sometimes we have textbook setups, but, you know, it's not evenly distributed. Some weeks we have 4-hour reversal after reversal after reversal. Other weeks we have a bit of dirty price action. You need to be adaptive by trading what you see, not what you think. All right? But this, again, is sorted for you by having the causality. If you have the MK Web and you have the monthly subscription, you see the live charts in front of your nose. So if you studied everything, it's not that difficult to select the right trades. Okay? And as you can see, it's all proven. The market causality is proven. Alright? What the smart money algos do is proven. I've done this here for years. The evidence is hard. You have seen how this unfolds. I've done live trades, live analysis, and then we also did time-lapse analysis on all time frames. You see how things unfold. You see how the setups are all repetitive in the MK block. You can beat the smart money algos by doing your homework and implementing well. Okay? That's all you gotta do. You don't need to overthink. You don't need to interpret any kind of patterns into the chart like many people do these days. Alright? You just need to objectively assess what you see in front of yourself and how much it would be reasonable to risk for that particular setup. You need to be able to wait an hour if it's required and things need to unfold. You need to be able to say, you know what, I missed that one, I'm not running behind it. You need to be able to accept that on some days things are not going well for you and you just were not focused or made mistakes, or you even did the right things but there was just too much whipsaw going on and unscheduled news. You can lose the battles but don't lose the war. Okay? And if you win some battles, it doesn't mean that you won the war. You didn't outsmart the game. Okay? You just had a good run and you were on point. Now, to do that over a long period in time is another story. These days, everybody is so short-term focused. People want instant reward. Their attention span gets shorter and shorter and shorter. But that's not how this game works. You need to invest a few years of studying and tape reading and demo trading. You need to. But people want their instant reward like they swipe on their phone. Yeah, left or right, or the next video, or whatever. But that doesn't work for a complex activity like trading. Think in the long term. Okay? And everything will be good. And look, I'm not just saying that. I lived that myself. Look how I built up this project organically, step by step. I didn't do any shortcuts. I didn't go for quick cash. No, I went step by step, even it's slow and it takes time. That's how things should be built. Think in the long term. And guess what? Then things happen which you wouldn't have thought are even possible. That's how this works. But if you calculate, oh, how much will I make this, then and then and then and then, that's when things go wrong. And that's also, by the way, why the best traders are very humble. Okay? They know all that. They are not losing their mind over a good week or a bad week. They think in the long term. And again, if you're a causality trader, you can focus on the implementation. That's a good part. And it's difficult enough. But you don't need to system hop and buy all kinds of indicators in EAs and all this crap which doesn't help you and makes you lose money. All you need to do is just to apply what you learned.